Hi, what's up, guys? It's your boy Art Morrison the third here with another YouTube video. 7 creative ways to invest in real estate. This piece of content was created because we have so many people who are not only in our program looking to get started in real estate, but even just people on both Instagram and YouTube and even TikTok who are just so concerned with funding and getting financed for deals, not really understanding how easy it is actually to find money for real estate deals. I'm really excited to dive into this, but I want to go through this with you and kind of thoroughly explain all 7 of these creative ways. And I actually came up with an 8th while I was just talking. And then there's a 9th bonus that we'll talk about at the end. So, number one, a very popular one these days, seller financing. This concept is kind of difficult to understand for some, so I'm going to spend a little bit of time breaking this down. Whenever there's a person selling the house, they have the ability to use the equity that they have in the house to basically allow the buyer to make payments to them. Okay, so if I'm a property owner and I have a $500,000 house and I have it all the way paid off, well, instead of you taking out a loan to buy the house, I can loan you my 500,000 in equity and you pay me instead of the bank. So now over time, I get to make those hundreds of thousands of dollars that the bank would typically make over the next 30 years. Now, why would someone do this? There's a number of reasons, but number one is because you make more money over time. All right. Number two, people who are investors or are older or are just retiring out of owning real estate and are just sick of it. And honestly, there's a number of reasons. I mean, this is a very popular, well-known thing. Some properties are not attractive enough to put on the market and get the amount that someone wants. So for example, in that example that I gave you earlier, if a property is worth $500,000 and someone's trying to sell it for, $500,000 and it's not selling for whatever reason, whether it be the area, whether it be the market, any type of reason, that seller might not be willing to take less. They might not be willing to take 450 or 425. They might want the whole 5. Well, this is a way to make actually the property more attractive to buyers and actually get it sold at the price that you want. And like I said, they actually end up making more money down the line. Number 2 is subject to, right? The term subject to is a term that you actually will find in a lot of loan documents. And all it basically means is you're taking over the current owner's mortgage. So let's pretend it's the same seller as my previous example. He or she is trying to sell the house for $500,000. Well, guess what? They have a $450,000 mortgage on it, so you can't do seller financing. But what you can do is simply take over their payments. Okay, so some sellers will say, "Listen, I'm trying to sell it to you for 500 grand. Give me the 50, and then take over my payments for the remaining 250." Now, why would you do that, right? Why would you give them 50 grand and then take over the rest of their payments? Well, in today's economy, interest rates are fairly high. Let's say this person maybe bought the property when interest rates were half as much. But you can save a ton of money by assuming a mortgage with low interest rate instead of getting a new mortgage with these new interest rates, right? So subject to is a great way. Like it's very popular right now. And Pace Morby, who's a genius at creative financing, has made it extremely popular in this market. Interest rates are going down, yeah, but if you look back in 2020, interest rates were like half as much. So if someone bought a property in 2020 and now they're trying to sell, it's a win-win because they don't want to, if they sell it for as much as they want to get, it's going to sit on the market longer, right? Potentially they might have to accept less because, when interest rates are high, property values go down, right? They might have, when interest rates are low, property values are higher, they might have overspent on this property, right? Now they can't afford the payments or for whatever reason, they're willing to do a subject to where you come in. Now, what you're buying the property for also dictates a lot of these. Like if you're buying a property for a rental, then it's basic math, right? Is the mortgage payment that I'm assuming less than what I can collect in rent? Same thing if you're doing Airbnb, right? I already covered this. You can assume a lower interest rate than the market rate. I think that's one of the biggest pros to subject to. Moving right along, lease options. This is rent to own. You've heard this before. I mean, it's great if you want to live in a property and you're like, all right, instead of just paying rent, let me pay rent to own. So I'm actually renting towards a goal. If you are doing rental arbitrage with Airbnb, again, a lease option is great because, again, you're paying towards something. That's the biggest difference between renting and owning. I know a lot of people, Grant Cardone, a lot of people are advocates for renting your primary residence. I mean, I am too. But when you own your primary residence, the mortgage is the lowest you're going to pay every month. When you're renting, it's your rental payment is the highest you're going to pay every month. So like as an entrepreneur or as an investor, sometimes it's great to have that fixed payment of where you live every month. And for me, honestly, I went from I owned my last 3 houses. I'm sitting right now in my apartment that I'm renting. Why? Because I own so many properties that I do want the one I live in to be the one thing I don't worry about. The one thing I do recognize about ownership is that when you're making those payments every month, you're paying towards a loan, and then you have the power and control over that property to be able to buy or sell it. Lease options are great if, again, you're just performing arbitrage. I'm looking to rent or I'm looking to Airbnb. I know that these two can make more than whatever my lease option is. This is very easy, right? You go to the seller and you say, hey, I want to lease this property. I want to lease it for this reason. And I want a lease option or, a rent to own situation. Super easy. But again, closed mouth doesn't get fed. So you have to discuss with the homeowner or motivated seller that you're buying from. All right, moving along, hard money loans. This is something that I use on almost all of my properties. And the real reason being is because these are easily scaled, right? Hard money loans are short-term loans based on the property's value, not your credit, not your income, not your debt to income ratio, but the property. So when I use a hard money loan to fix and flip a property, they're looking at what's the ARV, the after repair value of that property. How much work are you putting in and how much is that going to make when you flip it? That's what dictates how much interest they charge me and what down payment they require. So again, if I'm buying a house that I can get $2,000 a month in rent for, the property is so cheap, $100,000, $200,000, where your payments could be much less than that, then it's likely that the bank is going to require a smaller down payment. Very simply put, hard money loans are great because you can do 5-year loans, 7-year, 2-year bridge loans, 1-year fix and flip loans, right? So there's a lot of flexibility. And because they're short term, they're often easier to get approved. So you can actually use a hard money loan to just hold you over until you can obtain long-term 30-year debt. All right, joint venturing. This is also my favorite. Our company does a combination of number 4 and 5 hard money loans, which we know we can get up to 90% of the money to buy a property. We then joint venture. All joint venturing is where you pull together resources outside of yourself on one LLC in order to close. So if I use hard money and I got 90% of the money to buy it, the bank's going to give me 100% of the construction. I found the property. I got the financing. Like I said, I formed the LLC. I've opened the bank account. I signed for the loan. If I can find someone who has the 10% down and maybe can help me with some administrative fees or help me manage the deal and manage the team, that's a match made in heaven for me to be able to buy that property using none of my own money. And for that person who does have the money to be able to invest in real estate, without having to do all of that work that I just mentioned. Right? There's people out there who have money to invest in real estate, but they don't have the work ethic like you, or the ability to find deals like you, or the negotiation tactics like you watching this video. So if you bring those things to the table, you can then joint venture with people who do have the money. So now you can buy real estate with no money out of pocket. Speaking of where you are, house hacking. This one's popular. I won't spend too much time on this. You can use a primary residence loan, okay, to buy a house up to 4 units. So as an investor, I'm always going to recommend don't buy a single family. Okay. If you're going to use your primary residence loan, buy a multifamily, 2 units, 3 units, 4 units, because the more units, the more rent you can collect, which is always going to be a better performing asset and less risky than a 1 unit. Now, because it's a primary residence loans typically say, oh, you're going to be living in this. Okay, we know you're going to make the payment of the roof over your head because you were doing so to rent anyway, right? So we're going to allow you to put down 5%, 3%, right? So they're very low down payment. Private lending, I'll be quick on this one. It's exactly what it sounds like. It's getting a loan from someone just as a loan, just from them, cutting out the bank. So very similar to seller financing, except instead of the seller giving you a loan, some random person, friend, family is going to give you a loan to buy the property. Now, again, you can pair this with others, and I'll talk about this in detail for number 9, but we pair private lending with hard money loan. Bank's gonna give us 90, I'm gonna go borrow the other 10 from someone else or somewhere else. You borrow from your 401k, you can borrow from your life insurance policy, you can borrow from a line of credit or credit card, or from another property in the form of a home equity line of credit. All of these are options. But for number 7 here, I'm talking specifically of finding a private lender, someone who has capital, and again, wants to invest in real estate, but doesn't want to do all this work. They just want their money in real estate because they know it's a proven place to invest Well, that's where you come in. If you can provide good opportunities to people to make money and say, hey, you give me 100 grand, I'm going to give you 110 grand back. Number 8, I'll also be quick. It's a VA loan. This is 100%. It's a no money down loan. Very simple. If you're in the military, you can get a VA loan, no money down. All right. That's America's way of giving back to veterans. You can get a house with no money down. You got to make that payment every month, but they'll give you 100% financing so you don't have to worry about a down payment. But this is 8 ways, guys. Like, people are doing these every day. These are not, I didn't make these up. You could probably Google these. I just packaged them up in a Google Doc and gave you a quick video explanation of each to help you along your decision. All right, but here's the cool part. It's the best part about this video that I'm going to spend probably the last 4 minutes on. The bonus of all 8 of these ways, you can combine multiple of these. You don't have to, none of these are mutually exclusive. So I'm going to give you a couple examples here of how you can combine some of these different strategies to obtain 100% financing. Let's look at seller financing for a second. A seller says, hey, I'm selling you my house for 500 grand. I need a $50,000 down payment, and then I'll seller finance the remaining 450. Well, where can you get the other $50,000 if you don't have it? You can get a hard money loan for it. You can get a hard money loan for any amount. You can get a construction loan, you can get a bridge loan. You can even get a hard money loan for a certain amount of the property and then seller finance the rest, right? They'll allow the seller even to gift you the down payment. Well, why would a seller do that? Well, a seller would do that if they're asking, in my fictitious example, 450, and you like, nah, I'll give you 5. Okay, my bank's gonna give me most of it, but then I need you to gift me back 50 so that I don't have a down payment. This is a creative way to not have to come out of pocket any money to buy real estate. All right, so seller financing can be combined with hard money loans. It can obviously be combined with joint venturing. Seller wants to finance you most of the loan, but they need a down payment. You can go to a partner and say, hey, listen, I got a deal lined up, seller financing. We just need the money. You bring the money. Let's work this deal together. Seller financing works with joint venturing. Seller financing works with house hacking, obviously, right? You can seller finance a property and live in one unit and rent the rest of the units out, even if they give you 100% financing. In that same example, right? They want 450, you can offer them more and seller finance more. Say, hey, listen, I don't want to give you any down payment, but let me pay you more for the property, but in the form of seller financing. Yeah, my payment's going to be more, but I'm very confident I can pay it because I have these other units to rent out. Okay, so I'm relieving you of your duties as a landlord. I'll take those on and I'm going to live with them and I'm going to pay you more money. Does that sound attractive if you were a seller? It absolutely does. And that's how people are executing these types of transactions, right? Your ceiling increases, your opportunity increases because there's so many combinations that you can use. I'm Art Morrison III. 8 creative ways to invest in real estate with little to no money down. Make sure you like, share, subscribe if you enjoyed this video and found it informative. Comment any questions. I love answering questions in the comments. Comment the word partner if you're interested in learning deeper how you can partner with us using one of these tools to close your first real estate deal. I'm here to serve. We love helping people close real estate deals. The more people that we can turn into real estate investors, the better. I'll see you guys on the next video. Thank you for tuning in. Peace and love.